Welcome back to our trading channel traders. This is Forex Profit Bill. On today's video we will be talking about the analysis we had this weekend that we sent on our social platform for those who uses our free services, and the trades we took from those analysis. The analysis were made on some major pairs on daily time frames, then the trades were taken on smaller time frames, using one of our best strategies of all times, the trend collapse, Rhodes bounce and the blues eye. You can check on the trend collapse on our previous videos, starting with Euro USD. On the weekend we noticed Euro dollar daily time frame showed some momentum shift. We saw an exhaustion of the market in a resistance whereby the market failed to break and close above the resistance, then a fake breakout was created and the market confirmed the momentum shift with a bearish candle that had a lower low and a lower close. We had a mini trend line joining the two previous lows which the market broke but did not close below the trend line. If ever the market chose to continue pushing up, we would have taken an advantage of the up direction only if the market pushed up and broke our support zone. We then would have looked for an exhaustion of the market using strategies that gives us ways to trade pullbacks or congestions in lower time frames. But the market decided to break and close below our mini trend line. Then we waited for the momentum that broke the trend to come to an end, waited for a pullback, then took the advantage of shorting the market using lower time frames for confirmation of the momentum shift on an ending pullback. See if we can bank that. The next chat will be Great British Pound Dollar. On our weekend analysis, Great British Pound chat showed a bullish market that kept respecting our rising supports or rising trend line. We also had our support marked point A. We were expecting the market to respect that support together with the trend line. When the market reaches point A, we were expecting a continuation, a fake breakout or a breakout. We then went to lower time frames to take an advantage of the opportunity when we noticed a continuation. We then confirmed it to be a continuation when it showed a complete momentum shift on lower time frames on point A on the second day of the market open. For a fake out, we were expecting the marker to go below the support and break the trend line, and break back in. We would have used lower time frames for spotting the full momentum shift. That is because we had the bigger picture already played out in the bigger time frames. If ever the markets decided to break and close below the trend line, then we would have waited for the momentum that broke the trend line to come to an end. Then wait for a pullback, then take advantage of the opportunity when it gets to point B. We would have opened smaller time frames for more. But the market continued with an uptrend. Using one of our best strategies, we managed to spot an opportunity on lower time frames, and took a buy trade. A signal was sent to those who uses our free services on our social platforms. The next chart will be New Zealand Dollar US Dollar. In this chart, New Zealand Dollar US Dollar, during our weekend market analysis we noticed a bullish trend that respected our bullish trend line. The market had pulled back to retest our trend line and a support in point A. We were expecting the market to bounce on the trend line and the support to continue with an uptrend in point A. If we looked closer to the chart, we noticed that prices closed a bit below the support, but had not yet touched our trend line, so we were still expecting the market to go a bit down, then continue up and close above our support. We then went to a lower time frame and got a better entry and took an advantage on a bullish market. If ever the market chose to push down and broke our trend line, we would have waited for the market to pull back closer to our resistance. If the market get up to point B, we then would have gone to lower time frames to check for a momentum shift using one of our strategies to take a sell trade, but the market chose to give us an opportunity for a buy. Our next chart will be on Aussie Dollar USD. On our weekend analysis on this chat, Aussie dollar, the market was on a bullish trend. We had a blue trend line that is going up, the market respects it. We also had a red falling trend line that the market broke above then pulled back to it. In point A, from the blue trend line market continued pushing up. We then went to lower time frames to look for reasons on Tuesday to get involved in an opportunity of a rising market. That is because the blue trend line meets with the red trend line in point A, and the market is still bullish, so point A was our next big thing for a long position. We bugged the market. If ever the market decided to push down and break and close below the trend line, we would have then waited for the pullback. After the pullback we would have went to lower time frames for better confirmation of a full momentum shift using one of our strategies to take a short position, but the market chose the buy signal first. The next pair is going to be US dollar Swiss. On the weekend analysis, in this chart dollar Swiss we noticed a very bullish market that has broken and closed above our previous resistance, given us a congestion candle and continued up. Morning we noticed more momentum coming in lower time frames. Using one of our strategies we took that chance of taking a long trade, however we were also expecting a pullback before the continuation of a bullish trend on lower time frames. An opportunity appeared, and we took it. And it's went very well. Next is dollar CAD. During the weekend market analysis, on this chart US dollar CAD, we noticed a downtrending market, a downtrend line that the market kept respecting. The expectations on this market were continuation with a downtrend. We then waited for the market to show exhaustion of the present momentum. On Monday we checked for a shift to downside in lower time frames. We then took a sell trade or shot the market. If ever the market pushed up and broke and closed above our trend line, we would then have patiently waited for it to pull back to point A, then would have taken an advantage on an edge we would have gotten on lower time frames using one of our best strategies to buy the market. But the market gave us a continuation down, so we sold the market.